You got me running, got me running. Shake it, shake it, shake it, feel that. Raise your hands up, raise them up.
All right, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. This is episode 340, and it's the 23rd July, today, 11 a.m. here in Singapore, GMT +8. Okay, so if it's your first time here, a big welcome. We do this currency call every Monday to Friday, and the currency we analyze is as follows: Monday, Aussie and Kiwi; Tuesday, Euro; Wednesday, Pound; Thursday, Yen and Gold; and today, Friday, will be the Canadian dollar and cryptocurrencies. So do join us every day to get your analysis for each of those currencies. All right, so in this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so yesterday was the release of the ECB monetary policy statement and press conference. So I'm going to get Kim Hong here, currency analyst at LCMS Traders, to share his views about the news release. Kim Hong.
All right, thank you, Junwei, and happy Friday, everyone. Okay, yes, so the European Central Bank, they met yesterday, okay, for a monetary policy meeting, okay. Now, basically what they did was they did nothing, okay, to the monetary policy, okay, meaning interest rate remains, okay, unchanged, and the QE just proceed as normal, okay. In fact, there wasn't any discussion on QE tapering or, when we are going to be tapering and things like that, okay. So, the three QEs that they have, the three parts of the QE that they have, the PPP, APP, and the TLTRO, well, there wasn't any discussion, okay, according to President Christine Lagarde, okay. Now, however, okay, they remember that probably like 2 or 3 weeks ago, they actually did a revision to the policy, okay, to their inflation policy. So with regards to that, they actually did a revision to their forward guidance, okay, on interest rates. Now, let's just dive straight into the monetary policy statement, okay? So, so this is the part that they did. This is I would say, the major change, okay? The Governing Council expects the key ECB interest rates to remain at their present or lower levels until it sees inflation reaching 2%, okay, well ahead of the end of its projection horizon and durably for the rest of the projection horizon, okay? And it judges that realized progress in underlying inflation is sufficiently advanced to be consistent with inflation stabilizing at 2% over the medium term, okay? Wow, so what this means, okay? Reading of this paragraph doesn't mean anything, but so over here, okay, when they say projection horizon, okay, remember that the central bank will release a quarterly projection, economic projections on every 3 months, right? So they usually provide projections for 3 years, okay, the current year and the next 2 years. So the last time when they released the projection materials in June, and they actually released projections of GDP and inflation for 2021, 2022, and 2023. Okay, so these 3 years will be, okay, this is how the ECB defines their projection horizon, all right? So if you look at the projection material, whatever data that they actually projects, okay, over that period of time will be their projection horizon. Now, so what this means, okay, let me look at the, okay, so what this means is that they will be staying, where is that statement? They will be staying accommodative, okay, as mentioned here, revise its forward guidance, okay, it did so to underline its commitment to maintain a persistently accommodative monetary policy stance. Now, this is actually, I would say, quite a dovish approach to monetary policy, okay? So with that, we will have to focus from now on the, I would say, the key economic indicator to be focused on, okay, from the Eurozone, okay, will be inflation, since they actually say that future interest rates will be highly dependent on how inflation turns out to be. Okay, now okay, so I think yeah, so the revision of the whole inflation policy right now is that they are taking this whole symmetric 2% approach, meaning they allow inflation to be slightly below or above the 2%. Okay, but what they want to see, what the ECB wants to see, is that the inflation, okay, to be, where is it? Let me look for this again. Ah, yes, here it is. Okay, what they want to see is inflation to be, well, 2%, okay, at the 2% level before the end of their projection horizon. Say, for example, right now, they will, if let's say the whole policy is working right now, okay, that means we'll be seeing something like a 2% until like maybe 2022, okay, since the projection horizon goes all the way to 2023 as of right now. All right, so they also want it to be sustainable, okay, not just like 1 or 2 quarters of 2% inflation. Okay, now during the press conference, okay, since inflation is the main key right now, all right, during the press conference, ECB President Christine Lagarde, okay, mentioned that inflation will be temporary. Okay, that is due to the recent rise in gasoline prices and like the shortages of chips, manufacturing of chips. Okay, that led to increase in used cars price and things like that, used vehicles prices. Okay, so she actually say that the central bank actually expects inflation to rise. Okay, it's a good thing, to rise over the medium term, although remaining below their target. Okay, if you recall that the most recent release of the Eurozone's annual inflation data, okay, was like 1.9%. Okay, that's what they mean by remaining below the target. Okay, now that is for the medium term. For the longer term, the central bank is actually expecting inflation to increase as well. Okay, which is good, but it will remain some distance from that 2% target. Okay, now all these were actually shown in the previous release of the projections. Okay, so the ECB back in June, when they released their economic projection figures, they were actually expecting inflation in 2021 to be 1.9%, okay, 2022 to be 1.5%, and 2023 to be 1.4%. As we can see that there's a decline in the projections of inflation, which is getting further and further away from the ECB's 2% target. So what this means is that according to the central bank, okay, we are unlikely going to see inflation hit the 2% target anytime soon. Okay, what this translates to is unlikely that the central bank will be increasing interest rate anytime soon as well. Okay, now talking about, wait, let me get to this. Talking about inflation, okay, let's just take a look at how inflation has been performing for the past couple of years. Okay, so in June, okay, over here, June 2021, when they released the inflation data for May, okay, it was at 2%. That's good, right? It hit the central bank's target. Now, when was the last time that they actually, when the Eurozone actually hit 2%? Okay, let's just do a quick scroll down and take a look. See, we don't see any, we even see like negative inflations and for like few months, which is bad. Okay, and inflation has been hovering around like 0%. Okay. Okay, so the previous time that we actually see inflation hit 2% was back in November. all right, November 30th, 2018, which was 2 years ago. Now, that was actually before the pandemic started. Now, pre-pandemic, if let's say inflation has a hard time, okay, hitting the 2% target, then, yes, I know that, we know that historical data is not a very reliable, it's not the best, way to predict future data. But as we can see, the long-term trend on inflation hardly hits 2%, okay? Now, for the central bank for the Eurozone, okay, to actually maintain a 2% inflation for a period of time is going to be quite a challenge, okay? So with that, I would say that we should not actually expect the central bank to raise interest rate anytime soon. Okay, but of course, in the near future, okay, if let's say if the recovery, okay, if the Eurozone economic recovery were to be very robust and very strong, such that inflation is sustainable, okay, at the 2% target, then of course that will lead to a revision in the central bank's forward guidance as well. Okay, but as of right now, it's unlikely going to be the case. Okay, especially with the with Delta variant, the COVID Delta variant hitting Eurozone, and there's a rebound in the number of cases in the Eurozone as well. It's more unlikely. Okay, so what this translates to Euro, okay, the currency Euro, is that well, my personal take is that Euro is likely going to be dovish. It's likely going to be bearish. Okay, due to the dovish tone sent out by the central bank. Okay, so yes, yesterday we see an initial strengthening in the Euro. Okay, but within 2 hours, shortly after the end of the press conference, okay, it just drops back down to whatever level it is. Okay, so with that, I would say that the next meeting, okay, the next European Central Bank meeting will be held on 9th of September. Okay, now the interesting thing about the next meeting is that the next quarterly projections will be released as well. Okay, so as I said, from now on, the key indicator to look out for the Eurozone will be the inflation data. Okay, since the central bank tied interest rate change to inflation, so we will have to pay attention to it. Now, in the next quarterly projections, they will definitely be releasing a new set of inflation projections. Okay, so yeah, from now on, we will have to pay a lot of attention to the projections of the central bank in terms of the inflation. Okay, now yeah, so the next meeting will be on September 9th, and we'll see how it goes from now on. And there'll be a series of data releases as well coming up. Okay, especially there's a series of PMI data, and that will definitely lead to be related to the inflation data as well. Okay, but as of now, personally, I feel a bit dovish, a bit bearish on the Euro. Okay, now with that, yeah, that's all I have for the central bank right now. Any new changes or any surprises that they will throw out, anytime, I will just keep you guys updated. Okay. As with that, I'll see you guys next week, and I'll pass it back to Junwei.
All right, thanks for that, Kim Hong. Okay, so let's head to the charts now with the dollar index, as I get Scott Andrews here from Forex Briefcase Australia to share with us. Scott.
All right, hi everyone. And I did notice Jin asked a question. It looks like you probably did answer that, Kim Hong. So we'll see. We'll see if Jin's satisfied at that. But so guys, the US dollar. Let's go to the charts now. Again, it's proving to be a little volatile. We did have a little bit of data coming out for initial jobless claims last night, and it was a little worse than expected. And what I'll do, we've got the 4-hour time frame up here thanks to Sam Trade. I'll just get the hourly up, and we'll get a little bit of intraday context. So we did see that even leading into it, the US dollar was running out a little bit of buying momentum. We tested the low here was 92.48. So I did talk about yesterday in the currency call a potential buy trade off 92.80. And based on what I was seeing leading into, I said watch for after 8 p.m., watch for the pre-market leading into the open of the US equity markets. And I wasn't really seeing anything that looked like there was significant buying confidence with the price action. So I let it be. We did see a miss, but then we saw, conversely, we saw, slightly better existing home sales. That was, the existing home sales was 1.4%. Last recording was negative 1.2, but then we saw existing home sales for June was 5.86 million compared with the forecast of 5.9, although it was better than the previous month of 5.78. So we had a few conflicting points to consider, but the US dollar, like we've mentioned before, is definitely quite happy to be well over 92. We're over 92, 3 and 4, which has been resistance previously on the chart as well, which I'll just go back to the 4-hour zoom out, and you can just see the range it's in. Recently, we've seen an uptrend develop, shorter term after, we've been happily holding this range. And, if you delve into the jobs numbers as well, if you have a look at the 4-week average instead of the week to week, we're very much close to what has been expected. We're in line. I'll just bring up a quick visual on that as well, just to show that it's definitely, there's nothing drastic going on with the jobs market or anything like that. So I'll just bring up this screen here. So what I'll show you here, so this is the weekly initial jobless claims data as well. So as you can see, we're back to where we were in June. And what I did notice, which was interesting as well, I'll just cycle down here. We did see, so the people receiving ongoing unemployment assistance fell by 29,000. So it's looking like we might not have, as many people claiming. It's very, as you can see with this, it's pretty, we did see it quite low at 368. We've had a bounce, but if we have a look at everything else that's going on in the market, I would say that, maybe with the PMIs coming out as well, I'll just go back to the chart. It's hard to say, let's have a buy, because if you have a 30 pip stop, the ceiling right now is the low 93. So it's a 1-to-1 risk to reward ratio. So there's probably better things to focus on than taking a buy trade on the US dollar. I mean, the flow is really still long, but again, it's the mechanics of the trade would say, if you got in right now, you had a 30 pip stop, you're only really able to make 30 pips right now. If you widen the stop, we will probably see a breakout, but we've got the FOMC meeting next week as well. So that's something to pay attention to. So really my thoughts right now is leave it, because we're quite sensitive. If the PMIs miss slightly, even though they're really high right now in the 60s, it's just you're fighting that slight miss and you'll get whipsawed out. So I'm leaving the US dollar for today, guys.
Okay, thanks for that, Scott. All right, so today is Friday and the currency in focus is Canadian dollar. So I'm going to get Jin Dao here, Jin Dao Tai, founder of LCMS Traders, a multi-million-dollar trader trading an account with more than US $15 million on a daily basis. All right, Jin, I'll pass it to you and your nice painting with the Canadian dollar.
Thank you so much, and special thanks to Robbie for noticing and saying something on the chat there. So Robbie gets extra points today. You can use your points as a credit for goodwill, and that's pretty much it. Okay, so end of the week, we are at Friday, end of the week. Has been quite a quiet week, actually, I would say, in the overall scheme of things. It hasn't done too much this week, but we are looking at the US CAD today. So just to show you what I mean by it's been a bit of a quiet week, here we have the US CAD on the H4 time frame. See, we started off the week at about 1.2607, and right now is at 1.2568. It shot up early in the week, came back down, and is still sitting at pretty much that same point. So in the scheme of things, this big shoot up and big drop, as much as it looks like it's a good trading opportunity, it would have been relatively hard to catch unless you take a little bit more risk. So this is something that I want to pinpoint or remind everyone that, when you start looking at charts on a hindsight basis, it looks like, oh, I should have entered there, I could have made money here or made money there. Don't just look at the charts of what happened and think about opportunities missed. You would have to have been trading into that zone of 1.2688 before you could have made that 100 pip move upwards, or trading a counter trend to break that support level to try and make that about 120 pip move downwards. And these are moves that looks really good on hindsight, but actually very hard to anticipate. So, just a bit of a reminder to everyone that tries to think about just the profits that you could have made instead of the risk and the opportunities actually available. So last week when we spoke about the US CAD, I was saying that we're looking for it to test 1.255 before bouncing back up towards 1.2688. It's done exactly that. So it came down, tested a little bit before tracking towards 1.2688. Right now it's back again at that same level as last week. What could happen? Looking here at Forex Trading Asia on the news, here forextradingasia.com, at the economic calendar. Today being Friday, we have all the news, the Euro news, the pound news, which we spoke about through the week already. Thing to focus on tonight is the retail sales number month on month for the Canadian economy was a minus 5.7%, expected to be a minus 3%. Core retail sales was a minus 7.2%, expected to be a minus 2.2%. At this point, what I would probably think is we might not, the market or the analysts or the data seems to be expecting a bit of a recovery, a bit of a better retail sales number, although still not good, but a bit better. I think that we might see a disappointment. I anticipate that we might see some disappointment on the retail sales, maybe a minus 4% on retail sales, maybe a minus 3% on core retail sales. So not a big miss, but still a miss from the retail sales number from the Canadian side. With that possibly happening, and also that strength, maybe the dollar index moving back up into the 93 level and higher, we could see some dollar strength come into play especially towards the end of this week, at the end of the week now, leading on to that weaker CAD, possibly weaker CAD or slightly weaker CAD with the dollar strength. What I anticipate here on the charts would be for the US CAD here on an H4 time frame. I'm still looking at that buying opportunity back up. So from this 1.2570 level, so about, let's make it 1.2585, 1.2585, you would have a 40, 50 pip stop loss to a good 100 pip take profit level towards the upside. You're looking at a 1:2 risk reward ratio back up towards that 1.2688 resistance level. This also, not just do we have the fundamental reasons, the economic data that could be supporting it to move higher. I'll put in this line here. You can see that despite the normal slow MACD that's pushing lower, showing that it could go lower, the fast one that I've quoted looks like it's pushing back up again. So I think that we might see some support at this point to push back up into the 1.2688 resistance level. So this, for those of you who are from the Traders Club, this is available to you when you've gone through the course. Those of you who haven't gone through the methods of how I trade, there is a course available where you can join. I don't even know how much is it, but it's cheap as chips. So make sure you get on board. I think if you join the club, it's free as well, with all the platform and tools available to you. So again, quick reminder, US CAD possibly going to support at 1.255, possibly heading towards the 1.2688 level. And actually, if I can take the chance just to come back into the news, onto Forex Trading Asia, a lot of things to pay attention to for next week, right? So I'll just do a quick preview into next week. On Monday, we do have some news, some US news, but I want to focus on the, where is it? Okay, here it is. On Wednesday next week, we have the Aussie CPI numbers to be released. We have also a lot of Canadian CPI numbers to be released. These, you can see the not big changes. That's why I haven't factored it in too much into the analysis today. And also on Thursday, we have the FOMC rate decision and press conference Thursday morning. So pay attention. I think that we might, over the next, or early into next week, see a bit of a quiet market again, but it's going to be leading up to all of this relatively big news, inflationary numbers on the Canadian side, the US FOMC, the Aussie, what was it? The Aussie CPI numbers before, and also a lot of other, where was it? GDP numbers coming from the US. And on Friday, we have a lot of news there, a lot of things to scroll through, but we have the Canadian GDP numbers as well. So again, I haven't factored this in because we'll give you that update next Friday on the Canadian GDP numbers. But, I think that despite this week being a little bit quieter, we're possibly going to see a bit more activity, a bit more volatility in the markets heading into next week with all those big impact news to be released.
All right, thanks for that, Jin. Yeah, so as Jin mentioned, we're going to learn, how to use the 5 steps that we use here every day. Click on that bit.ly link to get to the Udemy page. It's only 20 USD. As for if you want to get more support for the 50 Traders Club, weekly webinars and signals, everything, click on the Traders Club to find out more. All right, and
It's $20.
Is it 20?
We used to charge like thousands. Why is it $20 now? All right, you better get on board before I revise the prices back to the thousands.
Yeah, you guys should. All right, now, so today is Friday. The other ones that we do is cryptocurrencies. So I'm going to pass the time now to Daniel with the analysis on the cryptocurrencies. Daniel.
Hey, thanks, Jinwei. So yes, this week, cryptocurrencies was actually everybody's waiting for because of reactions to the level. So you could see here on my chart right now. Okay, so Bitcoin is happening now. What happened in the past week? This week, actually, what has happened? We do know, Elon Musk tweeted again, talking about Tesla could be accepting the Bitcoin again, provided, he said could be, provided it is green. That means use less power and stuff. He wants to see some backing, and we also hear that he's talking to also possibly Ether, right? So possible Ether, where if it shows also that it does consume less power, it's very green, he may consider to accept that as well. Then again, during one of the conference, Crypto Council for Innovation, there Cathy Wood was also trying to defend Bitcoin as one of the inflation hedge tool that investors can use. But overall, you could see that as there are more and more people or investors are looking at Bitcoin or crypto as a little bit risky right now because of regulations coming in. So now let's look at the charts. Now, when we look at the charts right now, as what I mentioned last week, the descending triangle is still holding right now. Briefly, you could see here briefly, it did drop below the 30,000 range before it comes back in. It seems to be breaking out of the descending triangle, but don't be too happy right now. Sentiment is still going to still considering here that a possible drop could be coming in. In fact, if it comes in again, then I would say it will drop to close to the 20,000 range, or the 19,200, whether I have a support level there. So let's do a round number, a 20,000 range. If it breaks below the 30,000 closely and continues moving down with a confirmation, then it could push down. So right now it is still to me, it is still in a consolidation phase coming in, and there's still a little bit of a bearish sentiment coming in. So do stay out of the cryptocurrency Bitcoin for now until firm direction. If you were looking to buy, it has to go above, I would say, on a daily chart, let it go and close above the 200 EMA level, and then if it moves continue up to, again, my same sentiment is it push up above 45,000 range, then a possible bullish statement price could be coming in. Nonetheless, if that's so, my bias is still with the descending triangle. I think still hold, still valid. It will continue to move down. Very bearish sentiments right now for Bitcoin. So Ether coming in, it is in my descending triangle right now. As I said, it will move past the 2,000 range, and I was very bearish there. And I said that last week I mentioned that if it moves down, break it down, it will move to the 1,700 range for the previous low. It did that, it just did that a few days ago. Now we're following the recovery, all the good sentiments from Elon Musk and the Harry Wood, coming during the conference itself, is trying to push back up to the 2,000 range. But nevertheless, the descending triangle pattern, it's still holding. I'm going to have, following the Bitcoin, a bit of a bearish statements, consolidating here, waiting for it to either push above the 2,000 range closely. If it goes again, same thing, do not trade right now. If it goes above the 2,500 range, then a possible bullish upward trend is coming in. Else, I'm still going to have a negative bias that's coming in below, breaks below the 1,717, and it could go even all the way to 1,005 or 1,003 level. So just be careful. Get a firm direction. If you're trading crypto, get a firm direction. If there's a direction in hand, then you do a trade. If you are buying here, maybe it's at all-time low, you could look for a buy, but however, it'll be a long-term play coming in. So I say no, preferably wait for it to have a clear direction, a market bullish sentiments before you look for a buying of the cryptocurrencies. Yeah, that's all for me.
All right, thanks for that, Daniel. So a disclaimer again, what we share here is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So do your own analysis prior to entering any trades. Okay, so Daniel, we have a lot of people coming in here from the Telegram, and they have been enjoying these signals for free. But I do know that in the Traders Club, you guys do these signals, supplement more information to the signals. Would you like to share more about the Traders Club on the signals?
Yeah, sure. In fact, let me tell you more about the Traders Club and the signals and what we do here. Okay, so in fact, let me do and share the Traders Club right now. This is an LCMS Traders Club platform where what we do here. Okay, let me get this in. Okay, so right now, everything is really all-time online here itself. This is the Traders Club, dedicated club platform, really for anybody who's serious about trading here. We host a community of traders, sharing trade ideas, analysis, monitoring the market together, really almost like part of a trading team. You could see here, you have lots of people like Scott coming in, talking about the market, giving a market updates, members here chatting, even asking any questions, and a lot of members here or coaches will be answering the questions. In fact, Gene is also mentioning that straight away give a warning, and an alert that if it breaks below a certain level, a possible trade to be taken, and many, many more. Okay, and then right then here on the market watch here as well, every day in the morning we do look at the market. For example, this currency watch list here, you could see in the morning, like today, 23rd of July, we will look at the market, what based on what's happened previous days, and then what was possibly coming today, possible actions, where the buyer's direction is going to be on the buy, trade, or sell, and what possible entry level and potential profit targets coming in. No, not only that, we have the daily currency analysis where we also give you, not only tell you which direction we are interested, why we look at it as a lot of analysis, giving you an idea of preparing for the day for you to trade. Now, not only that, we have lots of education videos here, as Jin has mentioned. If you are joining the club, we have the 4-day FX Kickstarter for you here, absolutely free, and many more analysis that while we took the trade, like Fibonacci, chart patterns, trend series, divergence, candlestick patterns, and many more. In fact, we also have a lot of useful links on how to install the MT4 platform, and the what you saw on the chart where the fast MACD that Gene has proprietary made it is also given to you free here. Then not only that, in this club we have lots of features here. We of course we have the calendar that we will see here straight away. In this one snapshot, you could see the calendar where you can plan your trades, know what surprises is going to come in. Now with this calendar, I'm very interested, always very happy to talk about the data flash. And they click data flash here. It is when the news is coming in. I always like to have this data flash up here because I find the news gets released earlier here than anyone else. And we click here, on the alert, it will actually comes out a flash alert button telling you, hey, the news is here. And then I'll straight away could to take a look and know what's happened to trade immediately if you're trading the news coming in. We have also many more features here like the FX heat map. You want to see which direction, which currency is going stronger or so. You could see right here, one glance here, straight away, immediately, you know the green here, which means it's a positive, moving in a certain direction, which is stronger or which is weaker. Really very nice features here coming in. Then not only that, as Jimmy has mentioned, we have signals here. We have the signals. If you come from the Telegram channel, you receive the trade signals late. You always wonder, right? Here in the platform, you get the signals 5 minutes earlier. And there you go. The signals here 5 minutes earlier than anyone. You can learn and not only that, here you can see the signal analysis coming in. Signal analysis coming in. You can not only trade the signals here, you not only earn from the signals, you also learn how to trade better. Now, this platform is really worth the thousands. It is definitely, those that say, a lot of people here wondering, do I get the signals on time? This platform is available on the web, on the desktop, on the mobile applications, which means you can get all your contents anywhere, anytime, and receive your mobile notifications of the signals immediately. Okay, just to end off here, we have 2 more coaching sessions here on Monday and Wednesdays. Do join us for the club members here. If you're not in on Monday, we have group coaching sessions where we tell you how to prepare for the week. We also talk about answer any questions that you may have on Forex trading to learn better. And also on Wednesday, we have live training sessions where we trade together and profit together. Now, this club membership and access to the platform is really worth thousands. This is your chance to right now to join only at $49 a month. For US dollar, $49 a month, it is really very affordable and also will give you much benefits to your trading. Now, all you need to do is click on the button here right now, fill it out and submit, and I'll see you in the club today.
Okay, thanks for that, Daniel. Right, so we have come to the end of the session today. Today is Friday. Have a good weekend. We will see you guys on Monday again for the Aussie and Kiwi. Thank you so much and goodbye.